Thank you.
Good afternoon, and welcome to the Strip Tinning Holdings PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. Simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so. Before we begin, I'd like to submit the following poll. I'd now like to hand you over to Richard Barton, CEO. Good afternoon, sir.
Good afternoon. Hello, everybody. Thank you for joining us today. I'm Richard Barton, the CEO of Strip Tinning. With me today are Adam Robson, on my right, our Executive Chairman, and also Adam Levan, our Chief Financial Officer. We're delighted to be sharing with you our interim results for the first 6 months of 2023. And quite delighted that they demonstrated a significant turnaround from last year, which has certainly been very, very difficult and lots of headwinds. We're pleased to have an adjusted positive EBITDA, albeit pretty small, nevertheless set against a considerable loss for 2022. Similarly, from a cash generation point of view, again, there is one quite small, but again, against a considerable loss for the previous year. We've managed to improve the business considerably operationally. We hired a new managing director, Mark Perrins, who joined us a couple of months after IPO. I think he was in the prospectus, but really his work didn't start until probably May or June time. And it's his efforts that have driven a lot of the improvements that we'll be talking about later. Our glazing order book remains strong and the pipeline is growing. Some of you who may have listened in before and read some of the notes from the broker, you may be aware we had some significant amounts of price increases last year. Despite those, we've managed to keep good friends with our key customers, and indeed the business is now growing again with them. We do expect a major EV nomination shortly, could even be today. Certainly we're hoping Q3, it may slip into October. When that comes, it will be quite transformational for the business. And so we're positive really for the rest of 2023 and also into next year. The order book is strong, £3.6 million. It's showing an upward trend. And us as a board, we can confirm the performance for 2023 will be in line with the information that's already out into the market. And our liquidity position remains satisfactory. Thank you. Next page, please. So the market outlook is positive. EV is exploding. I'm sure you're reading as much as we are. Both in the mid-market and the volume market. These aren't our figures, but the EV sales in Europe generally are up 27%. Also, there's more and more electrification going on in big trucks, albeit from a very low base, but it's interesting that trucks are now catching up with passenger cars. So another market for us to really be looking at. And really to say that the customers are actively seeking to develop new European sources for both cell contact systems and also generally for flex. There's a lot of activity in China, but there's a huge amount of manufacturing in Europe, and there simply is not the supply base. For glazing, our established existing business that we've been really doing since the 1960s, new car registrations are up, the chip gate is over, the supply chain issues that have really hampered car production seem to have come to an end. So car registrations are up nearly 18%, which is good for us just in general terms of order intake. And we're seeing a continued innovation in glazing products. More and more cars being launched these days have an entirely glass roof, which is a great base for some increased functionality, which is giving us lots of opportunity for some new innovative high value products to our existing customer base. Thank you. Adam, please.
I'm going to talk to you a little bit more about our progress in the EV market. This is a chart that we've shared with you before, and it shows our market segmentation, with the left-hand side focused on the mid-market, which is typically vehicles of under about 50,000 units per annum. There's all sorts of things in there, from sports cars, trucks, off-highway, specialist autonomous vehicles, electric taxis, vertical takeoff taxis, a whole raft of different things. And that compares to, on the right-hand side, the volume automotive market, so major platform programs for VW, for Fiat, etc. And typical volumes there will be anything from the hundreds of thousands to a couple of million per annum. We have more and more come to focus on the mid-market. As we get more and more exposure to that market, we find it more and more attractive. It's a market that works well for us. We like it that those customers tend to want a full cell contact system rather than just the flex, which is often what we find on the right-hand side. We like it that they want a full engineered solution from us, which gives us more value added on the product, a more differentiated product, whereas serving the right-hand volume market perhaps is more akin to a make-to-print type situation. And the level of competition we're finding is lower in that mid-market. We do face, in the right-hand volume market, very large competitors, companies like Megtech or Amphenol. And what we see is that they are relatively reluctant to serve the mid-market. There are such big wins for them to happen. The growth is so explosive in the high-volume market that they're tending to feel that the left-hand market is too small for them, too bitty, and perhaps they're not geared up to give the sort of highly responsive, engineered solution that we are able to give the customers. So for all those reasons, our focus is increasingly on the mid-market, and we're finding that an attractive place for us to be. So let me talk to you more about the progress we're making there. We continue to strengthen our team in that area. We've added a number of new engineers, but one of the most important is we've recently recruited a new chief engineer who we're hoping will join us at the end of this year. He's got a good background in electric vehicles. That's attractive in many ways. Those Asian customers have been leading the world in electric vehicles. So that's a great pedigree and a very good new hire for us. In terms of our CapEx program, our flexible printed circuit production line is now complete. It's in production, working today. We've got a next round of automation to put in for the full assembly of the cell contact systems. We're developing a specification for that that's both able to make the products we're expecting in the new nominations, and also flexible to be able to be adapted to future nominations. So that will be an important step forward for us. Alex has asked us if the time is right to look to diversify into additional markets. I think for us, definitely not on the EV side. We're very focused on that mid-market. There's a lot for us to do there, huge sales growth opportunities. Richard will talk to you a bit later about the glazing side, where it does look like we may be diversifying into the area of architectural glass rather than automotive glass. We're targeting 3 major new nominations at the moment. As Richard said in the introduction, a very important one which we hope will come through in Q3. Another one for another battery pack for another battery pack maker, where we are hoping that we will proceed towards B samples in the coming months. And then a couple of e-mobility projects where we have supplied one set of samples already, and we're looking forward to those projects moving forward as well. And just for those who know, those of you following us, you'll recall that last summer, almost exactly a year ago, we had to report the loss of what was then to be our lead customer, a Croatian EV vehicle developer. We had a dispute with them, and we've now reached verbally a satisfactory commercial settlement, which we hope to put into writing shortly. So in terms of our routes to market, our clear preference is this, what you see on the left-hand side, where we are a tier one supplying the battery module manufacturer. We provide them with an integrated self-contact system using flex that we've manufactured for ourselves. That's a very good, high-value, highly engineered product. We're developing a number of key relationships with certain manufacturers. One of them we certainly are influenced with. We have very much a preferred supplier status with, and we're looking to expand that base of key customers we work with. In the higher volume market, we're typically limited, as I said, to being just the tier two supplying the flex only. And that at times will make sense. It's perfectly decent business, and we have a number of leads we follow through on that, but we're quite selective about those. And then on what we do find on certain cases from the left-hand side is that their flex is beyond our current capabilities, and then we're developing a supply relationships in China with people who have ability to provide more specialist types of flex. And obviously we'll be thinking in the future about the extent to which we develop these capabilities further to be able to do that in-house as the markets develop. Alex has also asked, we talked in our intro about having £88 million of opportunities. That's a lifetime value of those contracts. And what can impact closing this to get to contract? Well, I mean, two things. The first thing we have to, on those, work through to the appropriate level of sample development. So that's usually the end of the B samples. So for them to be pushing ahead. And then will typically be competition, and we need to win that competition based on price, the quality of our design performance, and our proximity and closeness to the customers to win those orders.
Super. Thank you, Adam.
Richard's going to talk now a bit more about the glazing side of the business.
Thank you. So glazing is really what we've been doing since the 1960s, and it's interesting now again that after the carnage of the last few years, that the pipeline is growing again, and the prices have really rebalanced. We did put our prices up considerably during last year. We've stayed friends with our customers. They're now returning and placing regular orders. We have a number of new prospects with tier one glazing companies. Even in China, there are some new products coming along. From a connectors point of view, connectors and busbar are about equal share of £4 billion each in the glazing division. Smart glass is now being really installed in new vehicles. More and more vehicles have 100% glass roofs, and having a glass roof is an opportunity to put added functionality into the roof. You can touch it and move your finger and it turns opaque. You can house a new almost solar panel. It can house special Wi-Fi integration. So lots of opportunity for us to develop high-end high margin connectors, which is replacing some of the older style, low margin business that we really chosen to move away from. Alex did ask earlier on also about some other applications. So obviously we're really hugely largely an automotive company, but on our travels, our commercial director, Steve O'Connor's now been out and about traveling with one other constantly. We've come across smart glass also in architectural applications, similar functionality, but and again has demands, or technical demands on connectors and also on busbar. We've come across companies that are producing glazing for skyscrapers, but the glazing is completely see-through, but it's actually now a solar panel. So who knows where that may lead, but just very interesting that the market is there's lots of opportunities for growth, we think, both in automotive, certainly in architectural. So it's another string to our bow, certainly. So the glazing improvements, the EBITDAs continue to improve significantly. You can see the sales for the first half of this year, we're up £1 million on 2023. The gross margin is improved from 8 to nearly 9% to 27%, and we're targeting and we're working very hard to get that to return to the 40% level. Lots of things driving this. You may remember before we talked about some of the significant price increases we put through in a few stages during 2022, but averaging and totaling about 40% on our connectors and on the busbar product, which is a high margin product. Anyway, we did nevertheless manage to get a further 8% increase. Mark Perrins, the MD that joined us after we did the IPO, he's been strengthening the management team. We've brought in a couple of new guys. Tarek is helping us on quality control. Damien is helping us on procurement. And they're certainly driving through a number of the improvements. We think the improvements will continue into half two. The gross margin will strengthen. We think some more. We put some automation in, which is just sort of coming online now. We've managed to eliminate the last of our loss-making products. Nevertheless, glazing sales will be lower in half two, but that's really as expected, and that's in tune with the information we already have out in the market. Thank you.
Adam the van will take you through now the financial results.
So we've had a big uplift in £1 million of sales uplift compared to the same period last year. I think that's reasonably commendable, seeing as there was a couple of months of sales to Russia in the same period last year. So that there's an even bigger increase than that in there. The big driver has come from the glazing business, partly driven, as Richard and Adam were explaining, by the price rises, and partly driven by the volumes from the end of the supply chain issues, particularly around microchips, that affected a lot of 2022. So that was pleasing. Whilst on one level the EV sales were flat, if you adjust for the contract that we lost, then again we show good progress, over 40% growth with the other EV customers as we move through those programs. So some good progress on the sales side. Again, progress on getting material costs and labour costs under control. So the connector business is now showing 30% gross margin, so we're confident it will move on to our target of 40%. Busbars remains very strong product profitably wise for us. The sales increases were more modest there, but we've also been identifying material purchase improvements and also material usage improvements. So I think we're going to get a further boost on the on busbar margins going forward. So all that has translated so far to almost 27% gross margin compared to just under 9% in the same period last year. And obviously that's a big uplift in absolute terms as the contribution to overhead. In terms of the overhead, there has been an increase in overhead compared to the prior period as we continue to invest in the EV part of the business and strengthen the foundations around that. There's obviously also been a little bit of a 6 months, full year, whichever way you want to phrase it, effect from the recruitment that took place after the IPO. But I think this is giving us a much stronger foundation to move forward with. Mark Perrins has brought in additional people from his experience elsewhere to help on the operational side. But what we've also done is we've let people go or not replaced people that have left. So although we've ended up with some more expensive people, we've also lost people that mitigate that cost increase, and the people that we've brought in are considerably more effective, and roles have been combined, so they've got more responsibility, more accountability. So that's working. That's been working very, very well, and we'll see the benefit of that as the sales start to grow again. And what that translates to, as per the headline, is that on an adjusted basis, we've managed to turn an EBITDA profit compared to the £1.6 million loss that we had for the equivalent period last year. So that's moving in the right direction. In terms of our balance sheet, we've been making investments in property, plant and equipment. The movements are a little bit deceptive because we changed our depreciation policy from a reducing balance to straight line. So there's some corrections at the year end. But examples of the capital investment we've been making are the inkjet printer that we've installed, the clean rooms, the automatic optical inspection for the flexible printed circuit line, a new polyimide cutter. So this totals all over £1 million invested into the EV business. We've been reducing inventories. We have had to make some provisions at the actual year end, and we're keeping an eye on that, all related to the EV contract and the termination of the sales of our business relations with Russia. So we're having to keep an eye on stock, and that accounts for some of the movement on this slide from the 2.3 in June 22 down to the 1.59 now. But there are real improvements within that as well, because we've improved the manufacturing resource planning system, and we're migrating to a proper SAP B1 system that is intended to go live at the end of the year or beginning of next year after the year-end close. And that's allowing us to schedule what we buy a lot more accurately. And so we've got a big target to reduce inventories down. We haven't got a timeline on it yet, but the target will be below £1 million. So that will release some working capital as well. And then on the trade, the receivables, they've not increased in line with the sales movement compared to this period last year, because we're doing better on our collections as well. There's a big push on that, a real combination between the finance and sales and operations team to make sure that we get the money in from our customers. On the liability side, all of our we're under control with the trade payables, our trade creditors. We've got a happy enough supply base. Our debt, as at June compared to the prior year, compared to year end, is actually a little bit down. There's been some of our debts being actually paid off, but clearly we are taking more on, and as you'll be aware, interest rates have gone up. So there is an increased cost to go from the debt borrowing that we've been making to finance, to offset some of the finance investments. So moving on to the cash flow, you can see some of the impact of the changes in the depreciation policy and the adjustments, but the real takeaway from this slide, I don't think there's anything much more to say other than we were cash positive in a very modest way for the 6 months to June from operations, which is good for the business. And then talking about liquidity, the cash movements excluding CapEx. It could always be better. You'd always like a bit more float. But with the invoice finance facility that we have, that we can draw down against the debtors that we have on the balance sheet, we have an acceptable position for business as normal. We can manage our operations in this steady state with the facilities we've got around us. And in terms of the continued investment that we want to make on the EV side, we've got scope for vendor finance for a lot of the laser weld equipment that we're after. And we're also in discussions with a fund called the Advanced Manufacturing Supply Chain Initiative, which would provide a soft loan. And we're working towards that over the next couple of months. So we've had initial meetings from them. They've encouraged us to apply for that facility. So that's how we can afford to continue to invest and fund on the CapEx.
And Richard T, you asked the question, are you still looking at grant opportunities in EV? Yes, I mean, that ANSCI loan that Adam just described is a form of grant in a way, being a soft loan. We have applied for other grants. We're hoping to get one shortly to allow us to do a full strategy study around our requirements for further investment on the EV side, and hopefully that will be a foundation against which we can get future grants. So definitely grants are still very much part of the landscape for us. Richard, you also asked a couple of other questions. What about, is there any read across lessons from the demise of Trackwise? I think for that, I think the important thing that we would say is Trackwise were very ambitiously aiming to develop into the high volume automotive market. They invested very heavily in a very impressive high throughput production line. That is targeted at that high volume automotive market. Our strategy being different requires a different and indeed less capital intensive approach for the mid market. So I think, the lessons we draw from them is, they were up against the very large competitors in that market. Those competitors are generally, as we said before, whilst capable of serving the mid-market, are not really minded to do so at the moment. So we're not facing the same competitors, and we're not facing the same capital challenges. And lastly, I think always a challenge for Trackwise was that they didn't have an automotive pedigree, whereas we're coming forward as a proven automotive manufacturer with, in fact, products already. We have 2 sports car battery packs that we're making the cell contact system as of today. So I think that greater credibility is perhaps the third thing that gives us more confidence than we feel than Trackwise could have, albeit we're full of admiration for their ambition and for the steps they've taken. I think that also, Richard, slightly answers your question about competition. To be honest, in Europe, we haven't really identified any explicit competitors who are really focused on the mid-market. The biggest challenge we find is from people looking towards China, which always remain, are very advanced in terms of development of all sorts of electric vehicles. But we have some protection from that for the mid-market, where people want an engineered solution. That's obviously harder to get from a Chinese supply base, just as much as anything because of the distance away and the communication issues. I hope that answers your questions. So I'll just go forward to our summary slide. We're pleased with that progress in the first half, and we see that continuing into the second half. As Adam told you, sales will be slightly down in the second half as the last of the loss-making products drop away. But we're still expecting to maintain that full year forecast for EBITDA and to be EBITDA positive in the second half. The business then is on a sound footing for growth. That's evidence from the pipeline of sales opportunities we see, both for glazing and for EV. We hope to get our first major new EV nomination now in Q3. Could just slip into Q4, I think. And we think from that position, our cash position is satisfactory. So our priorities now are to converting those EV and glazing sales, continuing to develop our capabilities to better serve customers in both those markets and to do so more profitably, particularly strengthening our engineering and product launch team so that we can address more and more of the sales opportunities we see ahead of ourselves, and continuing to look for the right partners to work with who can bring extra know-how resources, people resources, and financial resources to help us accelerate our growth journey. So thank you, everyone. Thank you very much for tuning in again with us. Does anyone have any last questions they want to ask? I think we've answered all the ones that came up on the Q&A. I hope satisfactorily. Richard, any last words you'd like to say?
Yes, thank you. Any further questions, please type and send them on anyway. We will endeavour to get them answered as soon as we can. Thank you very much for your interest in our company and listening, and I take the opportunity to hand back to Investor Meet Company.
Richard, Adam, thank you for addressing those questions throughout the presentation this afternoon, and thank you for updating investors today. Can I please ask investors not to close this session, as you'll now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, and I'm sure will be greatly valued by the company. On behalf of the management team of Strip Tinning Holdings PLC, we'd like to thank you for attending today's presentation. Good afternoon to you all.
Thanks, guys.